Happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 29th, and wanted to discuss how markets finished the week last week up and how they finished the week, and then talk about the volatility that has really entered into the markets this week that we've seen. And last week, the S&P 500 itself finished down 50 basis points or half of a percentage. But one of the really encouraging things about what we saw in the market last week was when we look back at it, we saw that the S&P 500, even though it was negative half of a percent, the value sector within the S&P 500 was positive, and the small cap and the mid cap indices finished the week up positive, which was great for what we've been talking about, wanting to see those catch-up trades happen and see those come back to the growth side of the stocks. However, over the weekend, we got the information over the increased cases of COVID-19 in Europe, as well as the increase of cases here in the United States. And so we entered this week with it being the busiest week of earnings season. And typically, earnings are what drives the market forward. We are always looking at how corporations are making money, how much they're making versus their expectation, and that typically will move markets higher. Earnings so far have been, for the most part, very good. Most companies, over 80% of companies are beating, and they're beating by very significant margins, which is wonderful, you would think, for the market. However, the macro issues are what's looming over the market, the macroeconomic issues, the increase of COVID cases here in the United States. We are less than a week away from a presidential election. And so what you're really seeing in the markets is you're seeing some selling pressure, but what's not there is there's not very many buyers. So when you're looking at this week and you see these big down days, let me just kind of talk about why they're down as big as they are and why you're seeing several percentage down days. It's not that the volume is overly heavy, meaning that there's more people they're saying just get out, I want to get out, I want to get out. There's average trading volume, but people are going in looking to sell something, but nobody is there with any conviction to buy. And it's all due to the macroeconomics of, if we have the increased COVID cases, are we going to have more shutdowns? What is that going to do to negatively impact the economy? How is that going to impact us moving forward? We have a highly contested presidential election 4 days away. I'm just going to wait to see how everything just plays itself out. And that's what it looks like investors are doing right now. So again, I wanted to share some statistics with you. There was a study done of the stock market from 1926 to 2011. It studied the S&P 500, and it was studying the percentage chance of you having a positive return on your investment or in your investment in the money had you just invested in the S&P 500. So the average percentage of you getting a positive return in 1 year was 73.65%. So that meant if you invested your money and 1 year later you looked at the balance, you had an over 70% chance that your money would be worth more 1 year later than it was your original investment. However, had you left that money invested for 20 years, you had a 100% chance of having more money at the end of that 20 years than you did in the first year that you made the investment. So what that just tells you is, even though we have these volatile times in markets and you can see volatility, look at these volatility dips as buying opportunities, especially for the long-term investor. If you've got a 20-year time horizon, statistics have told us if you were to buy in today, you've got a 100% chance of getting a positive return on your money. So I understand that past performance is not indicative of any future returns, and I want that to be very, very clear. But these are what the statistics have told us studying the stock market and the S&P 500 from 1926 to 2011. So at any time, if you have questions about what's going on in your portfolio or any way that which we can help you, always feel free to call us. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope that everybody has a wonderful rest of your week. Stay steady, stay invested. Thanks.